Your credit score is more than just a number. It can determine your financial future. It affects everything from getting approved for a loan, qualifying for a credit card, renting an apartment, and even sometimes securing a job. But how does it work? What affects it? And most importantly, how can you improve it? In this video, we'll break down everything you need to know about credit scores in a simple and practical way. A credit score is a three-digit number that represents your creditworthiness. Basically, how likely you are to repay borrowed money on time. Credit scores typically range from 300 to 850, with higher numbers indicating better financial trustworthiness. Your credit score is calculated using information from your credit reports, which are maintained by major bureaus such as Experian, Equifax, and TransUnion. Lenders, banks, landlords, and even some employers may check your score to make decisions about loans, rental applications, or job offers. Understanding your credit score is the first step to taking control of your financial life. Credit scores are based on five main factors. Each has a different weight in the overall calculation. Payment history accounts for 35% of your score. Paying your bills on time has the biggest impact. Late payments, defaults, or collections can significantly lower your score. Credit utilization makes up 30%. This measures the ratio of your current credit card balances to your total credit limit. Keeping this below 30% is ideal. Length of credit history accounts for 15%. Lenders like to see long-term financial responsibility. The age of your oldest account, the average age of all accounts, and recent account activity all matter. Credit mix is 10%. Having a mix of credit types, such as credit cards, loans, or mortgages, shows that you can handle different forms of debt responsibly. New credit accounts for 10%. Opening multiple new accounts in a short period can signal risk, and hard inquiries from new applications may temporarily lower your score. Your credit score can affect more than just whether you get approved for a loan. A high credit score can help you get lower interest rates on mortgages, loans, and credit cards. It can help you qualify for premium credit cards with better rewards. It can reduce insurance premiums for car or home policies, improve your chances of renting apartments, and sometimes even help with job applications. On the flip side, a low credit score can increase borrowing costs or even prevent approval entirely. That's why maintaining a good score is essential for financial security. Improving your credit score is achievable if you follow consistent steps. Pay your bills on time. Late payments are the biggest credit score killers, so set reminders or automate payments to ensure you never miss a due date. Reduce credit card balances. Aim for credit utilization under 30%. Paying down debt rather than just making minimum payments is more effective. Keep old accounts open. Closing old credit cards can shorten your credit history and lower your score. Limit new credit applications. Only apply for new credit when necessary. Each hard inquiry can temporarily lower your score. Check credit reports for errors. Mistakes happen, so review your credit reports from the three bureaus and dispute inaccuracies. Diversify credit types. If you only have one type of credit, consider responsibly adding another, like a small installment loan or secured credit card. Negotiate with creditors. Sometimes creditors will remove late payments or negative marks as a goodwill gesture. It doesn't hurt to ask. Once your credit score is healthy, maintaining it is easier than improving it. Always pay bills on time. Keep balances low. Avoid unnecessary credit applications. Monitor your credit reports regularly. Stick to your financial plan, even when the market fluctuates. Think of your credit score as a financial report card. It takes effort to improve, but a little effort to maintain it once it's high. Your credit score is a powerful tool that can open doors to financial opportunities. Understanding how it works and actively managing it gives you control over your financial future. Start today. Check your credit score, pay your bills on time, and reduce your debt. Consistency is key.